businesses that grow in value as you get more users, and you attract more users because everyone wants to use the same network. And so it's Metcalfe's law: the value grows at the square of the underlying number of users. And I mean, if classical investment theory, Graham and Dodd value investing was, you look at cash flows and PEs and you try and buy things cheap and this, that, and the other. But Graham and Dodd never encountered, or it was very rare for them to encounter businesses that grew and became as bulletproof and valuable as the network businesses. I mean, if you look at kind of the Amazons of the world, which is up like 22,000 times since inception, or Microsoft is up a couple thousand times. I mean, or Google. I mean, the amount of money and the amount of value that's created in being in the leading network as an investor is just stunning. And another thing I talk about in the book, I mean, throughout the 2000s, I made some mistakes investment-wise because I would look at Amazon, I would look at Google, and I just couldn't get there. I had classic investment training, and I had, in Amazon's case, they were losing money. I'm like, I'm not going to buy a company that's losing money. There's no deep value there, right? Or, Google, the same thing. I was like, well, no, I never click on those ads. Why does anybody care about those ads? Well, the placement and fees and everything else, it turned out it was a really great business. And so, I'm not going to make that mistake again. Here we've got an emerging network of money that everybody in the world is going to need someday. It's like threading a needle. I mean, there are world-class geologists, and the patterns. I mean, there's a lot of pattern recognition in gold mining. I mean, and gold discovery. And we've got a lot more tools than we used to have. We can fly aeromag, we can fly, we can do LiDAR surveys. There's all kinds of things that they can do to say, hey, based on the way this geology looks, there ought to be gold here. And then they poke a hole and they find out, yep, we're right, there is, or no, we were wrong, there isn't. But there's a lot of slip between the cup and the lip. And to get from there might be some gold here to gold coming out the door is a lot of time, a lot of money, and a lot of risk. Which is why in the gold mining space, what I tend to focus on more than, I mean, I've got some drill stories. There are three categories. They're producers, developers, and drill stories. And the producers are the safest place to be because they have a mine that's operating, that's throwing off positive cash flow. So, they don't necessarily need to go sell stock to dilute you on a daily basis. The developers who have a deposit but haven't built the mine, or the drill stories who just think they have some good looking rocks that'll turn into a deposit, those guys, there's risk all over the place. I mean, and many of them fail. And it's like, you've really got to pick them very, very carefully.
So how do you have, I mean, people have, but
there's the Peter Schiffs of the world, who's a good guy and a friend, and he's got it right. I mean, so, look, before the Bitcoiners, the original hard money people were gold bugs. There was no other choice. Right. And we were all Austrian economists. We've all read the books and know the story of fiat and understand the corruption in the system. And I understand it. I mean, some of the gold people are very frustrated that Bitcoin came along and stole some of their thunder, but they're not mutually exclusive, and there's a role for both. And I get angry at Bitcoiners when they shit on gold people. I get angry at gold people when they shit on Bitcoiners, because we're all really fighting the same monster, which is the people who have, that create money without proof of work. They just, click a key on a computer keyboard and money appears. And surprise, their friends benefit from it. What a shocker, right? And so we've all got the same enemy, which is fiat. And, and they each have a role. I mean, if you're 80 years old and you're trying to preserve your wealth and you want to be in something that's not fiat based, you want to have some form of cash or money that will not disappear through debasement, and you don't like volatility, then gold's a pretty decent choice for you versus Bitcoin. It certainly is going to underperform.
Yeah.
And so, all of which represent money. And so, that is going to, in my opinion, drive the price of all three of those assets to levels that people today can't even imagine. And I get it, because, they look backwards and, fiat has been relatively stable for a relatively long period of time. I mean, the U.S. hasn't had hyperinflation since its founding, and it had high inflation during the wars, and particularly the Civil War. But, it's people they look backwards and think, well, I'm good. This is America. This is the dollar. It's going to be okay. And yet, if you look at the policies that we're following, if you look at the deficits that we're running, if you look at the way we're printing money to support those deficits, these are the kinds of things that, when they're done in other countries that don't have the world's reserve currency, they lead to inflation, sometimes to hyperinflation. And we're doing the exact same things. Now, other people say, well, we've got all the military, we've got all the guns, blah, blah, blah. well, fine, but unless we want to start a world war and force people into using our money, which I don't think we're going to do, people have the choice on what money to use. And everyone has a choice. Everyone wakes up every morning and decide, where am I going to put my savings? And we're going to leave them in the bank. We're going to buy a bond. We're going to buy a stock. The issue is money. And I think you know what I'm talking about. Maybe for listeners don't. There's a book called The Fourth Turning by Howe and Strauss. It talks about how every 80 years you have a cycle of a crisis cycle where the rules change. The last one before this was World War II and the Depression. Before that was the Civil War in 65. Before that was the Revolutionary War in 76, started in 76. And so every 80 years, kind of society gets thrown on its ear and a new set of rules come out of the other side. And I think we're at the end of the 80-year cycle, that started post-World War II when we had fabulous growth and the United States was on top of the world. And I marked the beginning of this fourth turning as 2008 because that financial crisis really kind of kicked it off, right? I mean, it was huge. It was worldwide. It was significant. And really the financial system nearly failed. And these cycles, they vary in length, and the model's not perfect, but it if you look at them, it tends to suggest they last kind of 20 to 25 years. Some are shorter. The Civil War was shorter, although you could argue it started early and right, just completely broken. FUBAR. And so
the revisions kill me. I mean, I just can't even.
Yeah, right. Oh, yeah. No, it's. Don't get me started on government statistics. I mean, I like Saylor's view of it. It's just like, why do you pay attention to any of that stuff? It's all just nonsense. He's right. It's all just complete nonsense. I mean, arguably, we've been in a depression since 2008. I mean, a lot of people have really suffered and continue to suffer in this economy. I mean, and yet the 1% continues to get wealthier because they print money to support the asset values that they have. So it's not good. I mean, it's really not good, and it's not hard to see. And I think you would agree, probably, I'm sure, in your interactions with people on day to day. At least the world is becoming aware of it, much more aware of it. I mean, and everyone reacts in different ways. But I mean, you've got this mob boss who runs the Teamsters, or the longshoreman, and he's like, hey, you guys all got yours, I'm getting mine.
Oh yeah. It's crazy. Yeah. Don't watch what they say on TV. Yeah. You look at that guy's house or from the Google.
Yeah. Right. No, exactly. But I mean, here's an interesting point. He was able to negotiate, and we see central banks buying record amounts of gold. We see, more and more countries interacting with each other, trading in their own currencies, and then net settling in gold, and not net settling in the dollar. I mean, and the U.S., a lot of this is self-inflicted wounds. I mean, the U.S., deciding to grab say whatever you want about Russia, good, bad, or otherwise, grabbing $600 billion worth of their bonds, while it might have felt good at the time when they did it, it was really a stupid move because it basically said to the entire world, hey, do something the U.S. doesn't like, they're going to steal your money. And so people started, all the Arab states, I'm sure, took note of that. The Europeans, a lot of people took note of that, and they're trading, between themselves without using a dollar. I mean, the Russians are accepting the rupee from India for oil and gas, and the Chinese are, purchasing oil and gas at 40.
On a 40,
and, yeah. And so that's important. And Bitcoin is making a giant bull flag, and kind of trapped in this range that it's in. And based on your numbers, you just said, kind of 60-day lag. Well, I think gold started hitting these highs, probably a little less than 60 days ago. So, I mean, it would not surprise me to see, Bitcoin take off. And I think I said this in another podcast. I tend to believe that I think Bitcoin might be 100,000 at the end of this year. I think there's a decent chance that, that something is going to break. The Fed's going to have to be more accommodative than everybody thought. And seeing that, gold is going to continue to run, silver will run harder, and Bitcoin will break out of that flag. And when it does, and we all know how it trades. I mean, when it gets on a bull run, it doesn't stop. So it'll get overvalued, by the way. I mean, there'll be a point maybe when it's at 200,000 print, and that will lead to massive debasement, just like the last one. I mean, I'm still stunned at how much the cost of living for all of us has gone up pre-COVID to today. I mean, it's kind of 40, 50% across the board, and the next one will be as bad or worse. And, that's really sad because, the cotillion can figure out how to benefit from it, but the rest of us need to buy food and gasoline, and it costs more. So, yeah. So that, that's what we have to look forward to, sadly. But, we can drain their system.
Yeah.
And the way we drain their system is we just don't play. we don't save in fiat. We don't store our money in banks. We become self-sovereign. We try and convince more and more people to be like us.
Yeah.
We cheer on the people buying gold at Costco, even though it's gold, not Bitcoin. We cheer them on because they are. Yeah.
Who've lived in a community for a long time. If they're not in their neighborhood, people know that they're not there. And I think you exemplify a lot of
Oh,
those.
you're very kind. I mean, yeah, certainly. I mean, you think about this country. There's so many great people in this country, and it is a great country. It's founded on great principles, and sadly, it's drifted away from those in a lot of different ways. And I think the monetary component of it has been pretty substantial. And I think it's an area. The reason I'm writing the book was that I just kept saying, I just kept pounding my head against the wall and seeing everybody upset about all the dysfunction and how broken it all is. And I was like, imagine you're like standing, there's a fire like burning down the house, and you know where the fire extinguisher is, and you're just like, grab the goddamn fire extinguisher. You know what I mean? Everyone's yelling at, well, this fire is this, and we should do that. And we should no. I mean, grab the friggin' fire extinguisher. It's gonna, but still, damn good compared to every place else, Russia, China, etc. And all on the gold standard, effectively. How do we get there? Do you know what I mean? And so, and then what's changed from 46 to present? Well, 46 to 71 was relatively decent for the United States, but 71 to present, the biggest thing that changed is we went off sound money, and
Yeah.
and that's the core problem, really.
Yeah.
Yeah.
Well, Larry, thanks for hanging out.
Oh, thanks, Dante. And love it. I hope we get to hook up again one of these conferences so we can do some lifting. Everyone who's listening should know that Dante is a beast. We were doing, I can't remember what we were doing, if we were doing back squats or push presses, but Dante was basically doing about twice as much weight as I was doing.
Oh man, I just